Good morning to everybody, and we are live. Welcome to Behind the Markets. It is Wealth Wednesday. Thank you very much for joining us. And it's also Central Bank Announcement Day, or what we call MPR or MPC Meeting Day, where we'll be also waiting and anticipating for that news as we'll be going through it tomorrow. Lots of data is starting to come out yesterday from the symposium or the town hall symposium, which gave us the half year data. And also, by the way, we also started to see some ZRA data. But before I get into things, I'd love to say a wonderful good morning to my ever so radiant co host, Stephanie. How are you doing today?
How are you, Munyumba? I'm fine. It's beautiful always to have you on board on Behind the Markets, as well as to our audience who's always waiting to join our discussion.
Thank you very much. And to everybody who's with us, remember, share this, comment. We will have questions that we're going to ask of you. And today we're going to be going through our regular market recap. We'll be going through ZRA data, the deep dives, and also Airtel half year results that came out. We'll be doing Zambia Brewery's halfway results, which came out tomorrow, and also the bond auction from last week, also the recap of the monetary policy announcement. But that's going to be tomorrow. You really want to glue in tomorrow for those ones. You want to see what are your buy sell recommendations, while also we will be looking into today's conversation on handling risk in investing. That's a very important conversation today, handling risk while investing. So let's get into today's. Today is the 23rd of August. Tis Wealth Wednesday. What do we see on the market roundup yesterday? Yesterday we saw that the Kwacha got a tad bit stronger, 0.06% up yesterday. Down, the dollar is down 0.46% on the week, down 0.05% on the month, and up 7.676% year to date. It still isn't a buying position, but we have a slight ceiling. It appears about 19.5 seems to be the ceiling that the dollar starts to feel some resistance as long as it climbs up. So that's where the cutoff point or the resistance point seems to be, and that if we actually break through this 19.5 and we start heading towards 20, that's when we start to see the dollar running away again. So it does appear 1950 has become a consistent resistance point over the last couple of months. Especially seeing maybe the central bank intervention and also positive signs of the debt renegotiation. Now, we also did see yesterday the stock market was back up about 0.8% as Zanaco shares bounced back up from the losses they incurred on the day before. And that also now has pushed us back to a stock market that is up 18.52% year to date. Bonds up 0.7% yesterday, but in dollars down 0.2%, and interest rates dropped by 0.001%. Now, looking against the Rand as well, we saw the Rand push back up to about 1.0396 by 1.13%, up 1.75% on the week, but down 4.96% on the year. The Rand is starting to have a little bit of that recovery, that sideways trading with 50% of the days being up, 50% being down. So we are getting a bit of what we call side-to-side trading with the Rand between 1.02 and 1.04. That's where we're getting a lot of what we call the sideways trading. We're not getting a similar amount with the dollar. We're still getting a lot of what we call boomerang trading, where it drops drastically and comes back to where it is, and drops drastically and comes back to where it is. So we want to see more of what we're seeing in the Rand, in the dollar, kind of that flattened out so that we can have a lot more long-term business decisions. We also did see yesterday that bonds are up 0.07% and up 17.29% year to date, up 1.98% on the month. GRZ bond index is up 8.86% year to date, but down 0.2% and only up 1.72% on the month. And also, we did see that interest rates dropped by 0.004% yesterday, but still up 0.85% on the year due to that huge spike that we saw at the beginning of the month. Copper was up 0.74% yesterday on hopes of Chinese stimulus, while oil, I think, traded a little bit lower, even though there was a negative trade. There was a drawdown on U.S. inventories yesterday, while we did see gold also up 0.23%. Year to date, you have seen that copper is only flat. It's basically has had no movement since the beginning of the year, while oil is down 1.8% and gold is up 5.47%. This is all in dollars. Expected pump price movements, we're now going to be tracking these on the daily as we're getting closer to the announcement. Still expecting 7.2% increase in the pump price. This is just to get everyone's mind correct on this. On the assumption that we've seen the dollar move up about 3.45% on average versus where it was last month. And also Brent crude prices up 5.72%. And at this point, we're using the ERB cost plus estimation, which is driving our expectations. So the expected pump price that will be announced on the 1st of September is expected to be somewhere in the region of 27.41, up 1 kwacha 84 ngwe, or 7.2 kwacha. That is the expectation of the month. Wealth insurance assets, we're seeing more of the Bitcoin sell-off. Bitcoin has dropped again to 506,000 kwacha 299, while Ethereum is down again to 32,069 kwacha. Both Bitcoin down 0.3%, Ethereum down 1.3%, while gold is up 0.18% on the strength of gold versus the weakening of the kwacha, but Bitcoin is still up 68.46% year to date, but down 10.69% on the month. Ethereum up 47.7% year to date, but down 10.79% on the month. And gold is up 13.65% year to date and down 1.86% on the month. Now, if you look also at where we are, wealth insurance assets, broad assets, that's meant to read the 22nd of August, we are seeing that bonds up 17.3%, stocks up 18.5%, gold is dollars up 7.8%, gold is up 13.7%. So dollars are the only one which are just slightly breaking even. Bitcoin is up. Bitcoin is up 68.5% year to date, and Ethereum up 47.7% year to date. But if you look at the quarter to date analysis, what do we find? The brown bar is the one that's the previous quarter, and quarter to date, what do we find? Bonds up 3.5% this quarter, stocks up 5.6% this quarter. USD is up 10.9%, while gold has been pulled up by USD to 10.7%. Bitcoin up 5.2%, and Bitcoin down 5.9%, Ethereum down 5.1%, meaning that they're all a reflection of dollars, or they would have been worse. So the broad market is really what is just keeping alive right now. And finally, in the international news, we'll be looking at our four horsemen. Japanese core inflation yesterday rose by about 0.3%. Those are headwinds. While we saw API weekly crude numbers show that there was a 2.4 million barrel drawdown, smaller than last week, but we have seen that 2.4 million barrels have drawn down from the U.S. Oil inventory. South African leading indicators are showing that economic growth is just getting tampered a little bit by down by 0.1% in terms of leading indicators. Red Book for sales in America, this is the only tailwind, is up from 0.7% to 2.9%, showing retail sales are starting to recover a little bit in America. Public sector net borrowing down in the UK from 17 billion to 3.4 billion, while we're seeing industrial data across the world, be it Britain, be it the USA, be it Japan, all still in negative territory. The Japanese manufacturing PMIs still in negative. Richmond Manufacturing Index in the US negative. CBI industrial trends orders negative. And the Korean manufacturing BSI has dropped from 72 to 67, while existing home sales in America are still negative 2.2%. So we are seeing that industrial weakness. Inflation is starting to still stay sticky, while there is industrial weakness, slow growth, and still elevated rates of borrowing and tightness of monetary policy. And that, Stephanie, is where we stand for now on our data dig in general. Now, in terms of data that came out yesterday, the Minister of Finance did make the following statement: the Zambian economy is expected to overperform for the remaining half of the year. He did cite that opening of a new nickel mine in northwestern province is making Zambia Africa's largest metal producer of metal. It says the mining sector has been the key to growth, but there's more that needs to be done in terms of energy, which is floating around 9.5 million megawatts to revamp the production at the new mine. So that's one of the things he's saying, that our weakness in our energy sector is one of the things that will actually, unfortunately, hinder growth as well. It says 2024 to 2026 medium-term budget plan will focus more on actualizing and operationalizing electronic revenue systems to seal all revenue leakages. So in other words, they're trying to make ZRA easier to pay, okay? They're trying to make taxes easier to pay, and they're trying to seal up all the leakages in revenue to try and get people. I always say the number one solution to all of that is a central bank digital currency, because you can actually input tax if you use smart contracts into it. But that is a huge change to society already. But think about it this way, Stephanie. Here's a perfect example of how a central bank currency can actually affect people. Think about whenever you use mobile money. Have you noticed that the charges for mobile money are already automatically calculated and automatically deducted upon your transaction, right? Exactly. So imagine if you had a tax system that was actually able to do that at source on transaction, and poof, it goes straight to the government without you having to do returns, filings, all that stuff. It's already automatically done for you. Automated taxes is something that is the beauty of the central bank digital currency. Now, one of the reasons obviously central bank digital currencies get resisted is there's all sorts of conspiracy and all sorts of things that we think about, but there are factors that can actually help in terms of tax collection. So it is something that if we're going to invest also in electronic systems, we should also invest in an electronic currency, especially through mobile banking. I know that, yes, not every Zambian yet uses mobile banking, but a broad enough number of us are already using it that it is spreading through society like wildfire. Yeah, and it's actually supporting, it's actually managing to grow across the economy very quickly. Other news that we picked up yesterday, Stephanie, was ZRA yesterday saw its collections of net taxes. So on the flip side of it, in as much as we're saying the economy is set for growth, ZRA information is not showing such great signs. ZRA net tax revenue collected dropped by 4.6%, sorry, that's meant to be percent, to 28 billion. Sorry, we just have a little bit of a visual barrier to it, but it dropped to 24.7 billion, sorry, in quarter two 2023. H1 net collections of 748.48 billion kwacha, 7.7% below target. Now, the largest underperformance was recorded in the company tax area, which was 29% low. It was also mineral royalties, which was 23% below, customs duties, which was 13% below, and also domestic VAT, which is about 6.8% below target. Lower than projected copper output. Copper production only came in at 257,000 metric tons. We've already tracked this in our year-end readings from January to May, compared to the period of budgeting where they expected to be about 366. So we already see, and this was due to some flooding at some major mines, which affected mineral royalties and mineral company taxes. So if the government is collecting taxes, remember, is suffering to collect taxes, remember that means that their only source of cash then becomes bond auctions and treasury bill auctions, if not slowing down spending. So either the government has to slow down spending, which may have the kick-on effect in some growth areas, or the government will have to start coming into the market to borrow more aggressively. Now, what's happened, remember, is that yesterday we talked about, and I will mention this, is that Moody's has upgraded Zambia's local currency bonds. So you can see 10-year bonds are starting to perform, and you'll see that. So the government actually has a little bit of a window here where they're actually raising quite a bit of money in the 10-year bond space, especially to cover in the shortfalls of the taxes at the moment. So long-term debt is supporting them at the moment. Now, here's some of the tax data that we did pick up even from ZRA. You can see that company taxes came in 29% below their target. So that's where there was a strong underperformance. And in terms of company taxes, what's interesting, Stephanie, if you look a bit lower, pay as you earn only came in 0.7%. So in other words, we are estimating employees a bit better, but companies are underperforming. Withholding tax came in 1.5, but here's the one that really catches my eye. Rental income tax. Rental income tax has come in 159% above target. The government was only expecting in the first half of the year to collect 78 million kwacha on rental income tax, and they've collected 205 million kwacha. You know why this is interesting to me, Stephanie? And one of the big reasons why am I interested in this line here on rental income tax higher higher than target by 159% and coming in at 204? Here's why. Rental income tax in the previous budget was actually reduced to 4%. Remember in the previous budgets, we've actually told a lot of landlords that they now only have to pay turnover tax if they make less than 800,000 kwacha in total rent a year. So if you make less than the turnover tax threshold of 800,000 per year, as a landlord, you only have to pay 4% on your taxes. And these people are able to pay using mobile money. All taxes for property can be paid utilizing your phone. So ease of payment and lower taxes. And look at what has resulted, Stephanie. More revenue than expected. And this is what I kept saying. Higher taxes does not automatically mean higher revenue. So if you make it easier for people to pay their taxes and make it affordable for people to pay their taxes, guess what people do, Stephanie? They pay their taxes. Because if you make it 4%, and this is also what even helps, like I talked about with mobile money transactions, those fees they charge you are negligible at one point, not the withdrawal fees. I'm talking about the fees like when you're sending money to someone, they're negligible fees. So you won't notice them, but the mobile money, companies who are probably charging about 1 kwacha or 2 kwacha for every transaction that's being done. And remember, they're doing millions upon millions, tens of millions of transactions every single quarter. They're making their money doing this. So this is what I'm trying to point out to as many of us as possible, is that if we think very carefully about this, we'll start to see that taxes, this is why you can make the case for lower taxes. That's why, to me, this line on rental income is actually quite interesting and actually does prove the point, or does at least add as a proof to the point, that the government was budgeting for only $78 million kwacha in that first year and ended up collecting 204. Now, it's not the biggest game changer, but it is significant because everything else in this budget underperformed. It was the key overperformer. It caught my eye instantly. It was the key overperformer in the whole of this budget read. Everything else was a strong underperformer. And the rest of it, you did see that mineral royalties are down 23%, obviously due to mining. Due to mining slowdowns as well. If you're looking at indirect taxes, local excise duties were down 4.3% from their expectations, and local excise on cement down 24% as well. Insurance premiums are up 48.6%, showing more activity in the insurance. The insurance premium levy is up 48.6%. The tourism one is also up 81%, showing more activity happening in insurance industry and in tourism. VAT on imports came in 9.5% above expectation. Why was this? Consumer goods imports are starting to recover, Stephanie. It does seem that the offshore, the imports of finished goods by Zambian consumers is starting to pick up as well. So 9.5% increase. Customs imports also was down about 13%. But another overperformer was import excise duties and import fuel levy. That one came in about 17% above what was expected from it. So in other words, higher fuel prices also will probably stimulate that as well, with motor vehicle fees also coming in 38.8% above what the government expected. So this is some of the fees that we've seen driving it. But really, company tax, royalties, VAT came in under target, though it is part of the growth. Now, if you're looking at growth versus the previous year, okay, if you're looking at growth versus the previous year, here it is as well. VAT on imports has been the key driver of revenue. 50% of the government's revenue came from VAT on imports, pay as you earn, and withholding tax. Now, I can point out VAT on imports really mainly because we've been experiencing $300 million record levels of import tax, of consumer goods imports. $300 million a month of consumer goods imports has been driving this and has been actually pushing a lot of the VAT on imports. Pay as you earn also was up 7% from the previous year. VAT on imports up 56%, one of the fastest growing. Pay as you earn up 7% from the previous year, and withholding taxes also up 13%. Although I've even liked to say even some of these withholding taxes, if they can treat them similar to how they treat rental tax, you will see probably a lot more people coming out the woodworks. But these three are 50% of it. Non-mining company tax up 2.5% from the previous year, while VAT on domestic goods, this is actually a sign of also economic activity still picking up around the consumer section, up 56.7%. From last year. Mineral taxes from last year are down 40%, and mining company taxes are down 63%. 63%. So the revenue collected from mines is really low compared to last year, down 40% and 63%. And this is where the problems are coming from in terms of all the incentives that we probably handed over to our mines, but they're having problems obviously with flooding and a weak global market. But one of the other things I'll even point out again, import fuel levy, obviously this has to do with the fact that we've now brought back the fuel levies which we were holding off. So they're obviously up 1,490%. But rental income tax, again, Stephanie, I'm going to read this line out again. Rental income tax is up 56%. So it came in 150% above expectation, and it's up 56% from what we got last year. So what are we seeing? We're seeing that lower taxes is helping people pay. Lower taxes and ease of taxes is helping Zambians. So allowing people to pay that tax via their mobile phones, creating a very simple system and making it affordable to people has actually been a key driver of success. And I think this is something we need to start looking at across the economy to simplify the tax code and try and make this work, because that simplification, even when you sit down with landlords and you ask them, how has your experience been? Some of them will say they're more than happy to pay a 4% tax, which they don't have to queue up at the ZRA offices to do. They can do this electronically. These are the things that also help them, that also help the situation of collection of taxes much more. And this is why probably the government is looking to invest in the electronic systems or the digitization of taxes altogether. Other high performers obviously were things like export duties and also local fuel levy that also was up by about 600%, tourism up 35% from last year as well. So this is just some of the data that we've picked up. Import excise duty also up 46.5%. Now here's some interesting news on taxes that we all should remember, is that the key sectors that obviously contribute to taxes, mining contributes to 34.5% of taxes, down 9% from what it was contributing last year in the first half of the year. Financial services up 6.4%, so this was the key performer. Banking profits specifically are probably the key driver to this. Financial services up 18.3% contributed to tax revenue, up 12% from last year. Wholesale and retail trade up 1.7% to 9.6%. Manufacturing dropped by 0.7%. Public administration dropped by 0.3%. So we've actually seen that one of the key performers in becoming a bigger contributor to the market, to the tax base of this country, was financial services. And these altogether contribute 74.4% of gross collections. These top 6 areas. Now, these top 5 areas. Now, one of the other interesting things that we're actually seeing here in terms of it is 702 taxpayers are responsible for 80% of the total tax bill of the government. And this is why I keep saying, people keep saying, why do these big businesses manage to get concessions or manage to have such negotiating power with our government? And I always turn around and tell people, when somebody pays the majority of the tax bill, they have a say. It's even when you go to a funeral or a family wedding, Stephanie, Uncle Ndarama or Auntie Ndarama are the ones who say everything. When you have no money, you don't speak. When you have money, you speak. So this is the reality.
Yeah.
When you have no money, you speak during elections. When you have money, you speak all the way through. Okay, this is the reality. When you have no money, you speak during elections only. But when you have money, you can speak every year, and this is one of the problems of Zambia. And I'm not going to chalk this up to the government or even the foreign businesses. A lot of this chalks up to us. We don't grow our businesses. We don't work on ourselves. And I know people don't like that tough rhetoric, but we need to start getting involved. If you want to have a say in the way your government operates, you need to start getting involved more and more and more. And we need to start doing this at a higher level. Not the moment we get money, we start playing around. We need to start getting involved. Okay, so other news that we did see yesterday in terms of tax data, we did see that mineral sales declarations, here's what we actually saw. About 43 billion kwacha worth of mineral sales have actually taken place during this period. While we've also, in terms of looking at that, we've seen mineral royalties that have been collected at about 2.8 billion kwacha, making up 95% of all mineral royalties. Gold was second, coal was third, and nickel was fourth, with limestones fifth. So this is pretty much the roundup in all of what was happening in terms of tax data. Other deep dive, Stephanie, that we did pick up yesterday was Airtel released its half-year results coming out on the 22nd of August 2023. So yesterday we were going through them. And going through them, we did see that Airtel's revenue was 2.615 billion kwacha for the 6 months of January to June 2023, up 29.26%. Profits after tax in terms of Airtel up 33.14% to 470 million kwacha. Operating margins have stayed the same at 37% for the first half of the year, while net margins are up by 0.5% to 18.5%. So in other words, we are seeing an improvement in cost containment on the back end of Airtel. PE ratios rose a bit by 92% to 4.81, but still under the benchmark of 6.25. Price to book value is way overpriced. In other words, Airtel's balance sheet is still a source of concern and weakness for me as an advisor here. They are a concern of weakness, while current assets to current liabilities are still also in a weak position. Their cash position is also a problem. Airtel is sitting in negative cash of 786 million kwacha. But however, operating cash flow, we did see that the company increased its operating cash flow by 81.6% to 1.2 billion kwacha. Annualized earnings per share of 9.04. That's very strong. While the dividend declared for the half year is 2.61 kwacha. So there is another dividend set to come out for this company with a 12% dividend yield. However, debt to current asset ratio is still improving, but it's still currently sitting at 1.87. There was a 51% increase in debt and a 98.6% increase in capital expenditure. So they are investing in their infrastructure very strong. Now, in terms of operations, part of the things that actually improved, sorry, we have a little bit of a glitch there. It was meant to read 9.1 million customers, not 8.2. 9.1 million customers, up 12% from the previous year. And monthly income per customer at Airtel is up 12.31% year over year to 45 kwacha 0.78. So the average Airtel customer is spending 45 kwacha and it's up per month. Now, part of the key things, this is why I have looked at this stock as a strong buy. With strongly positive outlook, mainly because of growth of the industry, growth of the data sector, stabilization of the economy, sustained lending costs, and growth in smartphone proliferation. The more smartphones are used, the more data is being used, and the more money people are spending. The other thing also, however, the greatest threats we're still seeing is rising inflation, tightening financial conditions, and the biggest one is competition in data. Okay, competition in the data industry is where Airtel's biggest threat is coming from, and also voice over IP cannibalization, in that people are preferring to use WhatsApp calls a lot more these days than utilizing calls, but call bundles are actually operating well. So this is one of the weaknesses of the stock, but the data sector is going to be driving their growth. But all around, strong financials, strong performance, strong EPS. We're seeing growth across the top line, the bottom line, and cost management rising. So here's some of the trends that we've seen in terms of what we call the mid-year Airtel annualized earnings per share. This is the total profits divided by the total number of shares. As you can see, the profits of Airtel are rising strong and steadily. They were declining in 2019 to 2020, but they recovered in 2021, 2022, and then bang, we've got the strongest first half of the year in many years. With a 9.05 annualized earnings per share. Other things that we also did see in terms of their price to earnings ratio. Now, PE ratios are very important for people to look at. This is the price of the share versus the profits, and what we've seen, or the value of the company versus the profits. Now, the number is supposed to be anywhere from 0 to, or not say 0, but 0.001 to 6.25. That's the sweet spot number. If a stock is fair priced,
we have a call. Could we pick this call?
Sure, yeah.
You're live on Money FM Radio. Good morning, and tell us your name, where you're calling us from.
Hello, good morning. This is Hams on the line.
Yes, Mr. Hams.
Just a quick question, Munyumba. If I heard you right, you're saying the Airtel, financial report is indicating a negative cash balance. How does that work? How does that happen? I mean, this is an establishment that's been in the in the country, that's been active on a market leader for many years, and one would perceive it to be a cash business. So how does that happen? And I ask this in general terms. We see a lot of what we perceive to be very viable businesses, but if you're reporting that your questions are asked, is it all?
Do we still have you, Mr. Hams?
Or just
We're not going to say what network it is.
And I that sound is very familiar, Stephanie. It's very. But to answer the question Mr. Hams was putting about why does this company have a negative cash balance? Actually, many companies have negative cash balances. Even many of these listed companies have negative cash balances because they're operating on overdrafts. So they tend to have access to a lot of overdraft facilities. So they don't keep their actual cash. So when it nets off at the end of the day, they do draw into their overdrafts a bit more than they have cash lying around. Now they do have financial assets to back all of this. This is the weird thing about the way companies run. So it's like a person having a negative credit card balance. Okay, so that's what these banks are, these companies are doing. It's like a person who has a lot of assets, a lot of income, they're highly profitable, but they've overdrawn their credit card. So the negative cash balance of the company is something that can be offset by the assets they have. They've got the cash flows to manage it. They've got operational cash flow that is double that of their negative cash balance. So it's not something they can't get rid of. It's just something that they opt to keep around because they have access to it and they can use it. Now, often this is where people start to argue with me about, you see, Munyumba, there's good debt and there's bad debt. Yes, these companies do use debt and they use credit. But the thing is, they're also disciplined. I don't believe that I don't believe in the statement good debt or bad debt. I believe, Stephanie, they are disciplined people or undisciplined people. And the majority of people are not disciplined. Now, companies are naturally disciplined because they've got, for every financial transaction, they've got finance directors, finance managers, cash controllers, boards of directors. They've got a lot of governance structures that protect them from a gross misuse of such funds. You, Stephanie, as an individual or even as a small business, do not have the adequate governance structures to protect you from overdrawing money from your businesses and buying a car. That you don't have. You don't have that personal control as a person. So yes, these companies just simply use a lot of bank overdrafts as opposed to keeping cash around and tend to deploy their cash. And one of the things you also have to understand about cash businesses is as much as they collect cash, they also have to deploy cash a lot. So they just opt to keep negative bank balances in there where they do have draft facilities that allow them to. And they do pay interest costs. So that's one of the threats, by the way. Whenever you're looking at a company that you want to invest in, if you see that they've got a negative cash balance, keep an eye on interest rates in the country, because that means they're the most susceptible to interest rate movements. So if the Bank of Zambia announces that it wants to raise interest rates, then financing costs on companies like Airtel start to increase because of their negative cash balances. So these are things that you will see, their negative cash positions. Right. So let's get, and like I said, if you look across quite a spectrum of listed companies, you will start to see it's not dominant in all listed companies or even most, but it is something that significantly exists, especially with the cash businesses. Now, what we also did see is we also have seen that the price to earnings ratio of the company is currently performing at about somewhere about 4.81. And remember, the threshold is above 0 to 6.25. That's currently where we're looking at. That is the benchmark we're looking at with the median 7. So Airtel is a fair price stock. In fact, it's underpriced according to that metric. It doesn't mean it's automatically going to correct to that price, but fundamentally the PE ratio is telling us it is fundamentally underpriced. Now, if you look at the customer base of Airtel, it has grown to 9.52. It's up. Customer base has actually accelerated again, but you can see since 2019, customer base has risen from 5.79 million to 9.52 million. So that's where the growth is starting to kick in for them. And in terms of expenditure per customer, this to me is the better data. The average customer was spending 28 kwacha per month on their Airtel services. They've now gone to 45 kwacha. This was in 2019. And now they're spending 45.7 kwacha per month on Airtel services. And this is without a drastic increase in costs. Costs haven't gone up that much in terms of data costs and everything, but customers are still spending a lot more, which means that customers are using more services. That is what that is signaling to me. And that's mainly our data dig today. Stephanie, I want to read, I will kind of just level that out for the day, and I think we'll keep the rest of what we're going to talk about in terms of risk. But one of the figures I wanted to give Zambians before we clock out today and before we talk about risk another day is that 15.18 is the new estimated country default premium for Zambia as of August 2023, since their Moody's re-rating to CAA3 from CA, which has an 18.21% risk premium. In other words, what is the extra return on investment that an offshore investor is looking to invest in government bonds? That has dropped from 18.21 to 15.18% return on investment. Now, if you're looking at what are the risk premiums, default premiums, based on the rating, Zambia is CAA3, you can see 15.2, and we were CA, which is 18.2. But if you want to see how this is how your credit rating affects the interest rates that come into your country. So the better rated your country, the lower interest rates that offshore investors expect from you, and therefore lower government bond rates will pass on to lower business borrowing rates. This is why your government has to sort out the debt issue, because if you want interest rates at banks to go down for your mortgages, your cars, your businesses, the government has to get itself re-rated down. And if it can get itself eventually down into these B areas, because we have been sitting in some of these B areas before, it means that the default premium on the government is only about 4 or 5%, even 8% at worst, and therefore finally we can start to get some cheaper lending happening to the people. Other thing also is this is what we call the equity risk premium, but I wanted to show you how this affects African countries. So this is a chart I wanted to share with as many of us as possible. There are only 2 investment grade countries in Africa. Only 2 countries are considered investment grade by their bonds. Number 1 is Botswana with a rating of A3. Okay, that's not the greatest rating. AA is one of the greatest rating, but A3 is actually one of the top tier rating. Botswana is what we call an investment grade bond, and it only has a country default premium of 1.82%. So in other words, if an American investor wants to buy Botswana government bonds, they're only expecting 1.82% more than what they get in the US market. If they want to invest in Mauritius, they're only expecting 3.33% than what they're getting there in Mauritius. If you keep going down here, what we call speculative grade, many African countries are sitting in speculative grade. However, Morocco is just slightly there, 3.8%. South Africa is there, 4.5%. And if you go down, you find Namibia at 6.83%. And you come down all the way even to Togo at 9.3%. And then when you get into high yield, or what we call junk status, you can see how this affects. So once you can improve your rating, you improve the interest rate, which therefore improves what people are getting in the country. So this is one of the reasons why the debt negotiation is a very, very big conversation. Now, the next time we'll be talking about this, I'll be going into these risk metrics and talking to you about how you should be handling risk as an investor. Now, today we will be waiting for the central bank to give its announcement on the monetary policy rate and then the future of what we're seeing here. And also simultaneously, we'll also be looking at Zambia Breweries financials, which have come out a little bit stronger. There was Zambia Breweries financials, which have also come out, and we're doing our quick analysis on it. We'll be seeing that tomorrow, while we'll also be going through bond auction for August, which was done on Friday, and we'll be looking at what that tells us for the rest of the season. That, Stephanie, is my crunch down. But I will say one of the biggest takeaways from today has been seeing the movement in rental tax income. And one of the things that tells me is higher taxes does not automatically mean higher collections. Okay, people always think that, but rental tax income has proved that you can have lower taxes and still have a much better performing situation. With that, Stephanie, I bow out for the day. I don't know if you have any final words.
Well, my final weight is that thank you obviously to Mr. Hams for coming through to give us that comment, as well as to everyone that took the time to listen to our program. Till tomorrow again, it's bye for now.
Bye for now.